You missed only heaps of losses, bro. Yeah, man, we all got COVID. So I remember I had it like yeah, really shit as well. Um, for like a week. Let's see. Yes, just be positive. Stop talking. Stop talking shit. Let's see. So, what we'll do is we'll make a start.
We doing today?
Sorry,
What we doing today?
I'm just gonna sing some songs, bro.
Which one?
Just a bit of Eminem, a bit of Jay Z,
Eminem.
Kanye West. All good. So yeah, what we'll do is we'll do an hour of like the strategy, putting it all together. Obviously there's already one uploaded, so I'm just gonna do this one as like a recap for everyone or anyone who joined recently or stuff like that. Even if you've been here, it's still good to go over everything. Like a full kind of top down of like what I do from the beginning to the end of my trading days. So let me share my screen. We're recording, and let's talk about it. Let's talk about it. This will be uploaded onto the website later on. So can you all see my screen? Yeah,
Yep.
perfect. What I'll do is let me show you. Okay, so basically let's start from the beginning. Okay, when you first wake up, right? What's like what should you be doing? Like obviously, you should have a plan, right? You should have like a morning routine or something like of that sort. Like depending on where you are, depending on when the sessions are for you, because London might be when you're sleeping, or New York might be when you wake up, whatever. But let's say you come on for your session and you wake up, like obviously have your morning routine. Don't just jump out of bed and then straight onto the charts. Like that's probably the worst thing you can do, because you're just like your eyes are barely open, your mind is still like half asleep, and it's just it's going to be shit, because you need to be performing at a high level, quality over quantity, as you know. So like you'd rather be spending quality time on charts rather than just being on charts 24/7, and no sleep. So yeah, like make sure you're fresh, make sure you're ready, make sure you're fully aware of everything. So what I mean by that is like when I first come onto the like onto my desk, like the first thing I do, I pick up uh my trading plan, which is just an A4 page printed off with just simple notes on it. Yeah, the SD zones are the same color, yes. So any questions, like yeah, just write them down in your pen and paper, on your book or something. Just ask me at the end. So I'll talk through everything, and we'll keep it flowing. And then at the end, I'll answer all your questions. Put your hands up and stuff if you can. So like yeah, obviously in terms of like morning routine, do what you got to do, whether that be exercise, like shower, like whatever it is to make you feel fresh, right? Meditating, some people do that. um I'm not a big fan of meditating. I don't do it. Like I don't like, if there was a purpose for me to do it, like if there was a benefit to it, I'll do it. But it just I haven't done it. So some people like it, some people don't. So it's all personal, isn't it? So that's why like I can't really tell you what to do for a morning routine. It's all personal. Like whatever makes you feel good, makes you feel fresh and active, you do that. And then literally I read through my plan just to have like that muscle memory. Like I know what I'm doing every single day. I have the plan written, printed off next to me, just so I can quickly read it through. Takes me like 5 minutes or something less, just to read through the plan, just so that I know, okay, step one, do this, step two, do this, like, all the way down. And when I'm on the charts, then I know exactly what to do and what not to do, right? So then the first thing I'm gonna do is like I'll come onto the charts, and then I don't just jump on straight a trading view. I'll come on to check the news. So I'll check the news on two different sources. I'll check it on my book and I'll check it on forexfactory.com. Yeah. Make sure you're watching both because sometimes there's news that's on here that's not on my book and vice versa. So like, I just have it filtered to only the red folder news, to be honest. You could look at this one, but for me, I just don't need the purpose. I don't see the purpose for me to look at both because for me, it's all about making sure like I'm not trading at like the worst times, most volatile times, which you could get slipped easy and shit. Um, and I just have like Euro and USD because these like tend to move the markets a bit more than the rest, especially on US 30. Yeah, USD, of course. So I just have a look. I just have a look at these two before I start my trading day. Obviously, on Monday, as you can see, 3 o'clock, which is half an hour after New York New York Stock Exchange opens, NYSE or Bell. So like half an hour after we have this USD PMI news. So just stuff like this is like I'm gonna be thinking about. I'm thinking, okay, so when NYSE opens, so I need to make sure I'm not trading at that time. I need to make sure I'm not trading at this time. Um, just to be making sure like I'll only start to like actually be trading then like 15 minutes, after this or something. Yeah. Just so that everything has cleared out. All the shits, calm down, like if it's flying or melting or something happening like Vicky price action or rangy shit. So I would rather stay clear of like shit price action and just jump on when it's cleared out, right? And then the second thing I'm gonna always do is set up my trade assistant. Because what's the point of looking at TradingView if your trade assistant and MT4 is not even prepared? It's not ready. Like there's literally no purpose. Yeah. So then obviously like I'll jump onto my MT4. I'll open up MT4, have it ready. So obviously I got like a widescreen 49-inch. So what I'll just do is like I'll have this side by side. So I'll have this on the left side and I'll have my TradingView on the right side. Uh, TradingView takes up like 2/3 of my screen. This takes up just 1/3, right? Because I don't need it that big, right? And then obviously I'll open it up. Obviously go into what you're trading. So it'd be US 30, 1 minute chart. I already have the template, so like it's good just to open up the template. This is a bit wrong, but simply like depending on what account size you have. Obviously this is like a 300k MFF live, but I'd do 3k, and then here 10R would be like the template, like as a minimum. So when you do your lines, I click on this M1, do your lines, and then yeah, this will all be already like presets to like go to 10R, depending on what your stop loss size is, etc. So have it zoomed out, zoomed in, whatever you want, to make it clear for you. So I'll have this ready first, yeah. Secondly, then okay, after this, this is easy. It's all done. Make sure this is all on. This is on, right? And that's it, really, right? So then I'll come on to the trading view, right? Then I'm on the charts, right? Then I'm okay looking at high time frame first, starting from 4 hour. So obviously, like if you watched other videos on the website, as you can already tell, then what's the first thing you should be doing is mapping up your order flow ranges, right? So mapping up 4 hour on the 4 hour chart, you map up the 4 hour order flow range. So let's say like we have order flow ranges here to here. Now we're bearish. This is what flipped and broke. So this is what switched it bullish, pullback bullish, pullback bullish, continue higher highs and higher lows. Yeah. I'll go for the questions later, okay? But yeah, obviously, first thing I'm gonna do, I'm gonna mark up the 4 hour order flow range, right? So let's say I'm bullish over here, right? And you already know because I've explained in the last video about how to map up these order flow ranges, okay? So just rewatch it again. Here to here is my bullish order flow range, and expectation order flow could be to do this. So obviously, if we can get a pullback back into here to look for longs, that would be very clean. So what we can do then next is after we have the 4 hour order flow range marked up, we find the 4 hour ST zones, supply and demand zones. That could be counter trend or pro trend. So it means like you can look for them on the left. If we are bullish, we can look for sells using these ST zones from the top on the left, or if we are like bullish like this, and we can look for buys. The only buys that we can look for then would be directly the first place would be like this supply this demand zone over here, right? If we break this low, then obviously the next areas we have like multiple areas. We have this 5 hour zone, this 4 hour zone, this wick on the 6 hour. So yeah, we have like a lot of demand zones below. So yeah, I'll have all these marked up just so that when price comes into here in any of these supply and demand zones, I'll have my alerts on there. So I'll always have alerts on, and then I'll just wait for price to come into one of these zones, and then I can look for entry model ones if presented, or if not, then obviously the other entry models like entry model 2, entry model 3. So all depends on the situation, yeah. So obviously I've covered all that in the entries zoom. Okay. Next thing I'm gonna do is go into the 15-minute and do pretty much the same thing again. Same thing. 50-minute order flow range. We are bullish like this, right? And then we just have all this corrective price action, just making a new higher high, which is the expectation order flow to make a new higher high. And then again, yeah. We just continue flowing. So like I'll talk through a couple of trades over here as well. But in terms of 50-minute, I just do the same thing. I'll mark out the 50-minute order flow range, and then I do the same thing. I'll find 50-minute POIs inside of my range, right? And that's the difference between 4 hour and 15 is that on the 4 hour, I can look for counter trend sells as well as pro trend buys, right? Whereas on the 15-minute, it's mostly just looking for the pro trend buys, right? If I'm bullish, I look for the buys, right? With my trend, right? I don't just sell from here to here, like using some sort of like a 15-minute PO on the left. I don't do that, right? It's better and high probable. It's more high probable and more. I mean, in terms of strike rate, increase your strike rate much more if you're following the flow, right? Instead of trying to sell this against the flow and get clapped, trying to sell it and get clapped, right? Especially price just moving to the flipping sky, mooning, and you're just every time you're looking for a POI 5 second entries, trying to sell it and get clapped again, trying to sell it, get clapped, right? So it's just so much so much better for your strike rate and mentally as well, just being patient to wait for it to come back into discount, come back into a POI, and then we look for entries pro trend. It's just so much better for in every situation. Okay. After I've done the 15-minute POIs, 15-minute premium discount, looking for inducement in the leg, then I'll do the same thing on only on a 5-minute time frame if we are in a 4-hour POI like this. So let's say here we are in a 4-hour POI, and then I'll come up to the 5-minute. I won't ever use 5-minute for any other like time frame. I mean, are there any other reason for like order flow ranges and stuff besides from a 4-hour POI? Has to come into that 4-hour zone, which is in already, and then we see this 5-minute chalk bearish. So we're looking for this on Monday tomorrow, right? Not signals. It's not signals, but it's what I'm looking for. So yeah, we'll talk about this. But yeah, 5-minute chalk, obviously looking for sells to go down, right? Generating this sell side liquidity as well for like a future target as well as a week low in theory. So let's see, what happens. Think it was okay. So like next thing I'm gonna do if this is a situation, I'll go into different time frames to find the POIs, and let's see at the moment what do we have? Is it 2-minute? No, 3-minute. Yeah, about 4-minute POI. How big is it? So with these POIs on the low time frames, refined POIs, I want to make sure that they're like 4 pips and under, really, right? So if this is all one POI, then I just use this one POI right here, this one buy to sell engulfed POI, right? Or could I use it from the bottom? No. So I won't do it from this low because it's gonna be over 4 pips. I want to just have it at this one here, right? So when it comes into here, entry model 1 states that when it comes in, doesn't matter about what this leg is, if this is the same 15-second leg or whatever, it doesn't matter. If price comes in, we look for another 15-second chop for confirmation, right? Otherwise, I've seen it just do this, okay? So that's what I'm looking for, right? And let's talk about, that's entry model 1. Entry model 2 is this buy here, which unfortunately just went to 9R, but still, I mean, it depends on if you're in a challenge or whatever and you only needed like 8R or maybe 9R, then this would have passed it for you. But let's just talk about it in terms of like why this buy was valid. In terms of what we do first, like I said, we go on to the 15-minute, and you can only play these EM2 entry model 2 trades if we are pro trend on the 4 hour, right? So 4 hour is obviously bullish, right? Then from this low all the way up, and these 50-minute ranges are continuing to go higher highs. It switched one time here, but then continued bullish. You could just say it's like swap liquidity, structural liquidity to then move higher pricing, right? Again, it's done the same thing again here, where it's like swap liquidity to then go higher, right? So it does that sometimes, and that's fine. It's we just play what we see, and not what we like predicting the future to be like. We're just playing what's in our plan, and we just continue doing that. The edge plays out, and that's life. So for this buy over here, 50-minute was bullish, but there is no liquidity in the 50-minute leg itself. So that means on the 1 minute time frame, when it comes down to mitigate, we want to see inducement liquidity generated for it to be swept first, and then we look for the buy. So if we go into like a 1 minute time frame over here, for example, right? I mean, it's already done it like way to the left, where I mean, it's done all these mitigations to mitigations, and it's done a fake chop over here where it's take the low, take the high from this wick, then it's swept that low as liquidity, then it's made a chalk and then an entry possibly. But all this was like Asia session. Then it's done it a couple more times. It's like swept this fake chalk here, swept it, then it's gone higher. Then again, London session opened here. We have like this low as like a 1 minute chalk, fake chalk again, got swept. Then a real 1 minute chalk happens, and then it comes down to mitigate out of that 1 minute POI near the extreme, right? Again, with sweeping liquidity again, like this low is a structural liquidity because it took out this 1 minute high, right? So 1 minute chalk again, swept it here, comes into the 1 minute POI. We take a 15-second entry, and it's just super clean, right? Takes the low, takes the high, 15-second entry here, either on the chalk itself or on the mitigation. But I would have done it on the chalk itself due to the stop loss being only like 1 pip, like because it's smaller than 1.5 pips. I'm all right to just take it on the chalk itself. Especially if it's like New York session. If it's under 1.5 a New York session, then you're 100% like take it on the chalk, because you don't want to miss it in New York session. If it's volatile, if it just wants to go, there's no coming back then. So like you rather be in, and then not, right? So that was a trade, very nice trade, and the break even would be here because let's say you enter here and it's broken 15 seconds bullish again, pull back, break second time, I'll go break even, right? So that's it really. 15 seconds bosses or boosts, whatever you want to call it, like breaks of structure, breaks of order flow, just continuing higher highs, high lows. Like taking two of these, that's enough to go break even for me. Or if it gives you a 1 minute chalk, I'll just do it on a 1 minute, right? So that's it really. That was a very clean, very nice trade. And obviously, like, when you're doing this on MT4, let me just share that screen. So as you can see, right, on MT4, let me just show you, you won't have the 15 seconds, yeah? So when you're on like trading view, like I make sure I have this tool ready. So let's say, price was over here, and all I'm waiting for now is a 15-second shock. Right? So on this chart here, right, I know where the 15-second shock will be here, yeah? And then I also know on the 1 minute where my stop loss should be under this low, right? When it's like pulling up, right? I know my stop loss should be under this low. So when I'm on like I know this is how it looks on the M1. So obviously I'm looking to the left now at my MT4. So on MT4 I'll have my lines on, and then I'll click on this circle here so it locks in the stop loss, and then I'll make sure it's underneath the 1 minute low as well. Yeah, the same shit. Yeah, the same thing again. Like I know M1 it'll be like under this low or something, right? Like matching the candles together because they look the same. So you don't look at these prices. You see all these prices here, like 32884 and stuff. I don't ever look at this shit, like, because the prices will always be different on different feeds and different brokers. It's always different. So you don't look at that. You just look at the candle price action, right? The candlesticks, and they match the same as like trading view. So then when you match the price action, the stop loss line underneath the 1 minute low, I just add on like the spreads like 1.4, so 62, right? I make it 60, 61. Also, what's that low there? It's like 62.2. So I'll just make it like 60.8, right? Like this basically. So just take away like 1.4 from there, right? And that's it. So then, this is moving like with the price, let's say it's coming down, it's doing its thing, it's moving, it's moving. So as soon as I see it on TradingView and when I see it on MT4, like this stop loss here, it says, at the moment it says that's 1 pip, which is 100. So, when I see the stop loss being small enough, I can just click on buy. Yeah. So like when it's huge, let's say it's like 2 pips or something, 2.5, I'll wait for this to show like 1.5 at least, right? Or like depends on like what session we're in. If we're in London session, I'd wait for it to say like 1.5. But if it's New York session, I'll just wait for it like 1.7, 1.8. And then as soon as I see it, I'll click on buy and it might fill me in low. Yeah. Because you have to click it when it's like coming towards you, not when it's like leaving far away, like away from you. So like it's better to click towards you when you're doing a chalk entry, like an entry on the chalk itself. Then yeah, as soon as I see it like touch that line, I'll click on buy. Yeah, basically. So as soon as I see it break this 15 seconds, I know that it's a 15-second high. As soon as I see it break that, like I'm just gonna click on buy quick as possible. Like just no thinking, no hesitation, no nothing, just click on buy. Yeah. And that's it. So let me just share this screen. Okay, so that's a entry model 2 trade, right? So like obviously just same thing. Like obviously I'm making sure I know what time we're in. Like what's the time? I'm looking at the bottom. I'm like, okay, 10:30, 11 o'clock, and I just have my alerts on stuff. Like I'll have my alert. Like if I'm in this trade, I'll have my alerts at like 10 hour or whatever hour I need to make to like pass the challenge or make money or whatever. I'll just have my alerts on. Normally I just do 10 hour, but if you're in a challenge, if it only needs 8 hour, I'll just have my alerts at 8 hour. So I just wait for this. I'll wait for break even, put my alerts on both places, add alert, and then that's it really, right? You don't have to be watching every single candlestick moving up and down, up and down. Like your psychology is crazy, like going mad, like it's going down, it's going up, it's going down. Like you're just going mad, like watching it, right? Don't watch it. Just put your alerts and whatever happens, happens, right? And that's life. And you just move on to the next thing, right? So here again, he gave an entry model 1 trade. Let's go into that. Because basically, after it broke that 4 hour, it came into like a 7 hour demand zone. It gave a nice 5 minute chop bullish. It came back down. It gave a 1 minute POI, I believe. Yeah. So it gave a clean entry where it was a 1 minute POI this wick here. It then taps into it and it gives a nice 15-second chalk. Just a very clean, like, takes the low, has a gap here, bullish candle, takes the low, then it takes the high, right? Here, comes back in, that's a clean entry, small stop loss and everything, very good. Yeah, it had potential. Yeah, pro trend, 4 hour as well and everything. It's nice, like a really good trade. So, that's it. So like that was that for the day on Friday. And after I have finished trading, at the end of the day, I'm gonna be journaling my trades, of course. Like I'll always, well, I already do. I already do. Wait, what entry was in the 50-minute discount still valid? 50-minute discount. Doesn't matter about 15-minute or when you're playing EM1 in a 4 hour demand zone. Doesn't matter about 15-minute. But yeah, at the end of the day, like when I've done, when I finish trading, whatever, like I'm gonna always journal my trades and stuff. So like you already see it every single day. I do end of day markups. Even when I haven't, like even when I'm not doing teaching or mentorship or anything, I still do the same thing every single time. Like it doesn't matter. Like it's all discipline. It's the same shit every time. Like I've always had my journal, like even whether it be Notion, whether it be Microsoft Excel. I've always had my journal where I've taken I've done annotations on the charts like this, explained everything, taking screenshots from like high time frame, then mid time frame, lower time frames, entries, everything. write it all in my journal, and then just log it. So then at the end of the week on Sundays, I'll go back and look at the last week's of price action. Click on every link, every trading view link, every picture on my journal, like from every day, and I'll just go and read through like every day's price action, and just go read through like everything. And this really helps you to have that muscle memory to like know what you did, know what you're seeing, or if there was any mistakes, or if everything was all good. It just helps you to carry on that momentum, and like what you're doing, and you just keep refreshing it in your brain. So on Monday tomorrow, you're fresh. You're like what you're doing. You're ready. Like there's no confusion. Like exactly like how to you know trade. Basically, you know how to analyze charts. You know what you're looking for, and there's no like second guessing, because when you're doing this by yourself, and there's like no one's gonna tell you to click buy or sell. Like when this is happening like in real time, like you have to make the decision whether you're gonna click sell here or not, right? Like, have you actually zoomed out? Have you actually checked like what's happening? Like, are we in the premium? No, we're not yet. So like, simply, I'm gonna have my alerts on this, just like that, and it has to come here for me to get an entry, right? So like, it has to come into this POI for me to even take an entry. So the only purpose, there's literally no purpose for me to just come onto charts to stare at this candlestick. There's no purpose, right? You'll either have to break this low and make a new 5-minute range like this, or come into here to take a sell possibly. Yeah. We're still in that huge 4-hour POI on the left. Like I got a very nice SD flip zone over here, demand to supply flip, and then it's got a very nice V-shaped recovery, nice wick rejection from it as well. So it's giving a good reaction. So we could see something on Monday tomorrow. So let's see. Has anyone got any questions so far or anything? Let's see. We've got Astor. Astor with the questions always.
Yo, 15-minute. I keep forgetting my questions sometimes. If you go on the 15-minute, the trade in New York, EM2.
Yeah.
Yeah, it was in the premium.
Yeah, so do you remember, like, if it's just above premium, right, and we got 1-minute chocks, that's fine to take, right? If it's in the premium, but it's only ever given a 15-second chock and no 1-minute at all, then no trade. Yeah, but it has to be close to the premium. I mean, close to the equilibrium.
Right.
Yeah, you don't want to be like buying up here, basically, right?
Yeah.
It has to be very close to this premium. Yeah.
Okay. Right. For EM1, it's completely different.
Equilibrium. Yeah. So like EM2, you need a 1-minute chocks first, right? And that's the thing with EM2 is like, because like it's very good. Like the ranges are big. Like the price action is a lot of development. And when it gives 1-minute chocks, then it means like, okay, it wants to. It's a high time frame chock in it, so it's not like a little 15-second shit where it's just gonna give a 15-second chock, and probably come in a bit lower. So that's it. Yeah. A lot of trades are like this.
So for EM1, you definitely have to wait for it to either be, except for 70%, obviously, you definitely have to wait for it to be in the right places.
100%. Like EM1, like 15-second chocks, yeah, like it's such a small time frame chock and stuff. Like you want to just make sure like it is in the premium, like 100%.
All right, cool. Thanks.
The entry, no worries. Justin.
Hey, bro, how's it going?
How's it going? I'm good, man. How are you doing?
Oh, good, thanks. Pretty much. You just answered my question. Was the same as Asta, pretty much, because
cool.
just a minute ago, you told me we didn't need premium and discount with EM1, and I thought we were on EM2, yeah. So yeah, that's the thing. I got confused a little bit.
Oh, yeah, okay.
So yeah, I wouldn't have taken that trade myself because it was above the premium zone. But if you say we can trade.
You've seen many trades like this.
Close. Yeah, if it's close to EQ.
Yeah, it's literally like not even a pip away. Like it was, how big was it?
Yeah.
It's literally 1.2 pips from the EQ. Like that's not bad at all. Like, because the whole thing is like, you got to make sure is like this 1-minute chock and POI is like as close as possible to the EQ and an entry as well. So you can't just be like trying to like get in the continuation like this. No. Like I would never do this.
Of course, yeah.
And then this is a really good thing to know, because like you see how it's given another 1-minute chock here, right?
Yeah.
And instead of like entering like up here, you would just completely avoid it and take no loss. You understand?
Yeah.
Like I'd be very picky and be like, okay, only if it comes into this lower POI because there's nothing else. Like there's literally nothing else. Like, you know, this is mitigated. Like these wicks are all pretty shitty mitigated, right? Nothing else. If it doesn't come to
Yeah.
this, you should say there's no trade for you, and that's it.
Yeah, yeah.
Okay.
So you have a limit of pips, let's say, that where you classify like I'm not
I don't
taking
have
any
a
more.
limit of
No.
pips. Like it's just you can tell when it's close to the EQ or not. You can just see visually, right?
Yeah.
You can just see how like this is the EQ, like it's just so close. Like if I'm taking a buy, this is the only POI which is like basically the EQ, like near the EQ. Like where else are you gonna buy it from? Like it has to be down here then.
Yeah. So is that a trade you would take with a big account? Like,
Yeah, of course. Because these trades worked
Yeah.
out so many times. Yeah, you probably go back and check end of day markups. Like this one went to 9R,
Yeah.
unfortunately. Like it could have pushed to 10, but it already broke that high here. So it wanted to retrace and retrace
Yeah, indeed. Yeah.
pretty fast. But sometimes it goes a little bit further. So yeah, it is what it is, you know. It's fine. I'd always take it though.
Yeah. All good, bro.
Yeah, nice.
Thank you.
If you market execute at the break of the chart, don't you get filled higher up? So again, that all depends on like a couple of things. So like the speed of execution, how fast you click the button, how fast you see the chart. I mean, I always watch the MT4 because MT4 is faster than TradingView. Yeah, TradingView will like show it a little bit later. But MT4 will show quickly because I mean that's the real broker in it. So like when you're looking at it from the real broker itself, it's better. So then yeah, you're looking at that. Obviously, if you get filled higher up because of like volatile price action and stuff, then obviously that is what it is, you know. Like, but if you can get if because that trade there was like a 1 pip stop loss trade, this one on like the chalk itself. So like I don't even mind if I get filled a little bit higher, like because it's such a small stop loss, you know. So like I would still take that trade like that on the chalk. Yeah, the problem with like 15 seconds is like you can't really put a you can't put a limit. You can't really put a buy stop on it, you know, because like there's no 15 seconds on TradingView, and I also wouldn't recommend to get the 15-second indicator on TradingView because it's an indicator. It's a bit laggy and slow and shit. Like it's a bit confusing, like bit shit. You get filled high with buy stops. No, they're pretty much the same. It's the same shit really. Like if you market execute buy stop, like it's all about when is it gonna fill you in? You know, like it's all about when the broker's gonna fill you in. They might fill you in to the moon. You know, it doesn't matter if it's a buy stop or market execution. But yeah, sometimes MT4 gives a chuck, but TradingView doesn't, and you could have the chuck inside of a 1 minute leg, and you won't be able to see it on MT4. Yeah, so like, but if it gives it on MT4, then obviously it's just I'm gonna take it, like, because I'm watching it both, so that's not can't do anything about it. I'll be in it already. Okay. So anyone else got any questions? Ryan, yo, Ryan.
Hey, what's up, man?
Oh, good. How you doing, bro?
Doing good, doing good. I just have a question. So, after that EM2, it took the 4-hour high, and then it came back to that EM1 on the 15-minute. What do you class as like a V-shaped recovery? Like, would that counter into whether you'd play that EM1 because it just took the 4-hour low and it kind of came?
Which one? This?
No, the bearish drop after. Yeah.
What do you mean? As in, like, would it stop me from taking a trade?
Well, yeah, obviously you've said that one's valid. I was just thinking because it took the 4-hour low and then dropped in real hot. It wouldn't
took the 4-hour low or high?
4-hour high. Sorry.
Confusing me.
Fuck. Yeah, it's early.
Yeah, so, took the 4-hour high, then dropped. Yeah, I don't care.
Nah. Okay. Cool. Because I know. Yeah. Okay. Expected goal flow is supposed to go up, but all right.
Yeah, I just play like the edge, and if it's a valid trade from a valid area, I'm in it. I don't care about like if this done something. I don't know. Like it doesn't matter. Like it really doesn't matter.
Okay.
Yeah, it doesn't matter. If this came from a 4-hour POI though and gave 5-minute chart bearish, I'd be looking for sales. Yeah, but it didn't. So
no.
came from like this imbalance.
Okay, cool. I just didn't know if it breaks like a 4 hour high or low, then it comes back like a V-shaped recovery. You get a bit worried. But,
I mean,
no.
even if I was to get a bit worried, it still doesn't change like the fact that it's a valid trade and it's a good trade because it's
you
for
just
trend.
go for it, yeah.
Yeah, I mean, I'm gonna be in it, so
All right, cool. Cheers.
yeah, no worries. Any more questions? Keeping it nice and short, nice and tasty. Hopefully we get a nice sell on Monday tomorrow. But yeah, new month tomorrow, August the 1st. So new week, new month, new opportunities. Hopefully we can get some nice clean price action. It's already showing that it's a cleaner price action already, as you can tell, with like the clean order flow. You know, all this rangey stuff is like finishing like this rangey shit. But yeah, it's looking so much better now. Better times coming. Yeah, man. Already I'm missing like June and May and stuff because yeah, it was so popping like. So hopefully we can get some more weeks like that and be proper chilling.
I'm already happy if I can keep my account, to be honest, after all this price action.
Yeah. No, that it's such a
I'm already happy about that.
Yeah, same. Like, you know, me still keeping my accounts like alive. Like that's still a big thing because it's like that's number one thing is risk management. And if you're not good at risk management, there's no point for you to even be trading like a clean price action or messy price action doesn't change the thing, I think, if your risk management isn't good. So that's the beauty about it. Like, you know, waiting for the best setups, having good risk management, and being patient, being disciplined, following the same plan every single time, not changing shit around, not changing different like stuff every day or every week because of like messy, crappy price action. You know, like if you just stick to the same shit that works, then you'll be chilling. You know, when the clean price action comes along, and then we take advantage. That's the beauty about the strategy. Is like really, it really takes advantage of clean price action. It really does. Like, and messy price action. I mean, like, there's no strategy that will help with that. Like, literally, because if your strategy is good in messy price action, then I don't think it's going to be good in clean price action. It doesn't make sense. Like, you know, it doesn't really make sense. Does add up.
It's not really about like, if it's messy, it's more like does it protect you in messy price action? If you get what I mean. Like it obviously won't do well in messy price action, but like if it can actually protect you to be able to last through.
Oh, last through.
Yeah,
that's true. You know, yeah, like last through, because yeah, it's easy to trade range, like because I don't know if you know like I used to be a proper like range trader, so I used to like take like longs and then take like shorts and shit like inside of the ranges, like this sort of shit, like take it up and down, ping pong in it, and yeah, like you can catch all these trades. Like I've caught all these trades. I know how to catch these trades, but it wasn't good for risk management because you actually like lose more. Like people only show like the winning trades, like ping pong in it, but trust me, they lose like 2 times more than that. But they don't show it on TradingView. Just make you think like you can catch like every single trade, like no matter what. But no, it doesn't. It's not consistent, and it's kind of like a gambling mindset to have as well.
It's mad stressful too.
Mad stressful too. Psychology was shit, and yeah, like I wasn't like that consistent doing it. And I mean, I'm a pretty good trader. I'd say I'm pretty smart. Like I'd say I'm a hard worker, and for me to not be that consistent in terms of like profitability wise, like doing it that way, I'd say it's really not a great way to trade. Not lie. In my opinion, trade your MT4 broker, not TradingView. Yeah. True. So pretty much like, in terms of risk management, like personally, because I've been telling you guys for ages now, like, having that 2% minus 2% loss limit per day is a very good sort of mindset to have and discipline, because honestly, like, yes, prop firms have a minus 5% per day, but they want you to lose anyways. Like you know, they will push it like they want you to lose, man. Literally, they don't care about like you, so they care about your money. They don't care about you. But like, you know, if you're managing big accounts, like private investors, money and stuff, like you don't want to be losing more than 2% per day. Like it makes you look like a proper shit trader. It makes you look like you don't know what you're doing. It makes you look like, you know, you can't manage risk and your positions well and your own emotions well, and you're not disciplined. So yeah, sticking to this is very, very good. Recommend it. So that's what I do. I do 1% risk, and I risk like I have a -2% loss limit per day on an account, and that's it. You know, try to go for my 10-hour trades. You know, do my break evens where necessary. You know, there's a good diagram in the Discord, and obviously I talked about it as well on the entry zone. But you know, that's really what I do. And to be honest, like, you know, you don't want to be trying to force like 10 trades a day as well. Like if it gives, you know, probably like 3 opportunities in a day, like that would be something like you should be like, okay, that's enough. Like, you know, you shouldn't be trying to like force another like 5 trades. You know, just take what it gives you in your session and make sure it's the best trade that you could ever take in that day. And that's it. Like, don't care about the rest. Don't care about money. Don't care about passing a challenge. Don't care about profit targets. Don't care about nothing. Just care about your plan, executing flawlessly, like I say here. Follow the flow, follow the money, follow everything that you do in the plan, all the flow, and that's it. Like literally, keep it as simple as possible. Okay. Don't sell inside of a 4-hour demand zone, and don't buy inside of a 4-hour supply zone. Like besides from that, you know what you're doing with the entry models and everything and the order flow ranges. You know what to do with MT4, checking the news, like, and all these other little tips and tricks, like, you know, to get better strike rates, to avoid certain like losses because of different scenarios, like 70% rule, 70% rule for the 15-minute ranges for inducement, and the 70% rule for the 5-minute chocks on EM1, where you need another 1-minute chock instead of a 15-second chock. So stuff like that, right? And yeah, I'll start again.
Yo, go back to 15-minute, like probably around NY.
15-minute. Where?
NY. Okay, it was five actually.
Oh, 5.
Right here. So just this here. So this would be a high.
Mm-hmm.
So see the low of it. This is broken, goes low. Price comes up, right?
Yeah.
In this little area, right, they had the shit recorded sleep, but then the follow through didn't actually go past that candle. So would that be a follow through, or would it? Because it's equal. You see what I mean?
What this? It doesn't matter about follow through like that. Like if we are already bearish like here,
Yeah.
here, like this shit invalidates this as a chalk anyways, right? So it's not a chalk.
Right.
So like shit can't be chalk, but it can be a continuation.
Mm-hmm.
You know. So like for me, then it would just be here, bang bang.
Right, but does it like so? Does this count then? Because it had to follow through.
I had to follow through the bearish here.
Yeah, that's what I'm trying to say. Like, because it's literally tiny, like essentially equal, would it be a follow through, or would you just continue to use the previous range?
I mean, it is equal, yeah. So, yeah, because it's equal, like it's not follow through, then
All right, cool. Previous range.
Yeah, previous range, then yeah. So it have to be like from this high all the way down here, basically, then, right?
All right, so this would have to be the actual change of character.
Yeah, the proper high. Yeah.
All right, cool.
Yeah.
Thanks.
No worries. Anymore. Let's see. Yeah, same as a 15-minute high. Okay. All right then. So what we'll do is we'll wrap it up here then, and you know, we know what we're looking for Monday tomorrow. got this going on. Hopefully we can get a nice sell in London. Hopefully just hangs around in Asia, pops in, gives you a 15-second chug, and I'll take the trade. That would be beautiful. Signals channel is right here.
Cash.
Yes. Yo.
Cash.
Yep.
Yeah, before super quick one in. So from the left, if you go on the 4-hour POI that you marked from the left that we have now. I marked, yeah, that one. So I marked initially just the sell by wicks.
What? Which one?
Yeah, I marked only the sell to buy wicks in the beginning, because I thought that was the very last reaction.
You mean this?
Yeah.
No, like if it's a bullish engulfing candle, like bullish engulf, I'm using this. Yeah,
okay.
I mean, just sell to
So
buy
use it
the
anyway.
wicks. The wicks are like this. They look different. There's no bearish engulfing candle here. It's just wicks.
Oh, okay.
Like this has a bullish candle, so use the candle.
Yeah, sweet.
Yeah.
All good, man.
Nice one. Perfect.
Thank you.
Perfect. Okay. So yeah, any questions, drop it in the Discord in the designated channels, and I will catch you all later. Take care and study as much as you can. Make sure you go and rewatch all the videos, and actually go on back on your journal and go through all the chart markups that you've done for last week. Train your eyes so you're prepared for tomorrow and the week coming and the month coming and the rest of the year. So nice one. Reply to your DMs. You haven't even messaged me. I think I get hundreds of DMs, man. I'll reply back to all of them on Discord. Okay. No worries. I'll see you all later. Take care.
Thank you, Cash.
See you later. You're welcome.
Cheers, mate.